All right. I'm looking forward to an exciting day today. Let's come in here and take a look at the charts. This is the pre-market session, and we're getting ready to have an exciting day. So the first thing we're noticing is up in the upper left-hand corner is that the S&P 500's been on a kind of a nice rip tear higher. This is the 1-minute chart of the S&P up in the upper left-hand corner. In the upper right-hand corner is the Dow. It's been following along nicely. Not quite as clean as we had over there in the S&P, but nonetheless, it's a nice clean run. You can see over on the right on the Dow, I've got the bulls and bears turned on, so that's what's turning the price bars red, yellow, and green. We've also got Heiken Ashi turned on. We got a little bit of hesitation in there on the Dow where we didn't have it over here on the Russell or on the S&P. The Russell had a little bit of a run, but it's just kind of going sideways. And then, of course, the NASDAQ down here in the bottom right corner, it's been following along with that nice big run, same as the S&P. We're getting a little pullback right now. The market opening bell. Of course, this is the futures market. We're over here in the futures market. Let's bring up some of this information here for you. Let's see. The first thing I want to do is I want to pull up bring this up on stage. And what I want to do is I want to kind of show you the patterns that we're looking for. And what I want to do is I want to, let's see. I want to bring this up and show you. This is kind of, if I can figure this thing out. I'm new at this. Sorry, I apologize. Still trying to figure out. There we go. So these are the patterns that we're looking for. What we want to do is we want to find markets that are moving through trends. All right, so we want to have a proof that the market is bullish. Then we want to see a hesitation in the trend and then a continuation. So the first 4 or 5 bar rally, that's the proof, whether it's up or down, that the market is moving in our favor. Then once we decide that the market is moving in that direction, it's either bullish or bearish, we want a small hesitation in the trend, give us an opportunity to enter, and then we take off and go to the next leg. That's the idea, right? So if we come back over here to the charts, you can see down here, this was a perfect example on the Russell. Let's bring that full screen. And you can see in the Russell here, we had this A, B, C, D pattern. So we'll see the market taking off. We have a nice rally, a little bit of a hesitation. Those are small bars. So those small bars make it so that our risk is very small. So each one of those bars, if you look at the large bars, we come in here and draw that from top to bottom with just one of those big bars. Well, this is the mini Russell. Those are kind of small, so that's $30, but those little bars in there are only $10. So your risk is 3 times larger if you're going on the smaller bars. Now, the mini Russell is a little bit small market, and this market pretty quiet here in the nighttime session. So this is the early morning session. So you can see it's a little bit different, but that whole trend in there, that's the idea. This is a small market right now because the market's really not moving a whole lot. But that's the idea. You get the rally, the little small hesitation. It's that little small hesitation right there that we're looking for. That gives us a small risk versus reward ratio so that we're having a very small risk. And then we're looking for the next leg up. So that's your A, B, C, D pattern. A, B, C, D. And you can see the projection off of that thing going up to 100% on this one. And that was a perfect little setup for that trade. And that's kind of what we're looking for. That's the patterns that's the number one pattern. Now, if I come back over here to this screen, you can see we got other patterns that we look for. But each one, this one here, again, is a market that's taking off. We're still looking for a small hesitation in the trend and then a continuation. And then over here, this is if we get a triangle or a wedge formation. So the market kind of comes to a point and then it takes off and we look for a breakout at the top or a breakout at the bottom if the market's coming down. So that's what you're seeing on the screen right here. Coming in, this little pattern, this bearish pattern. See this little bearish pattern right here? If we come back over to the chart, that's this pattern right here, where the market comes down and just right across the top of these bars, it come down and then broke and fell once again. And now this is the market's taking off right now because this is the opening bell. Now we're in the futures market, so our markets are open 23, 24, 23, 22 hours, 23 hours a day. Woo, look at the market fall like a rock. It's shooting all over the place. Look at the Russell, it's starting to rally. I don't want to jump in and get into the fray of this very first few minutes. That's craziness. But we can see how this market's going crazy. Let's go out and look at the daily charts real quick while this market's going crazy a little bit. I want to look at the daily charts. And the daily charts still in this, if you remember from yesterday's class, the daily charts yesterday, we're still looking at them as if they're bullish, or excuse me, bearish. So the market's been coming down. This is our X1SA1. If you're not familiar with what an X1SA1 is, um, my book is out on Amazon, which talks about all the different Elliott wave patterns and the probabilities. And so that's what you're seeing in here. You just show you real quick. If we can get there fast, here you go. Here's your count measure process on this book that you can get on Amazon. Just search for Lan H. Turner and the book will pop up. And this book is out on Amazon, and it teaches you all about the Elliott wave patterns, the probabilities, and how to count and measure these trends. So you can see in there, this is the counting and the measuring. So this is an X1SA1, meaning that it's the first exit point to the short side, but it's the first entry point to the long side, which is a real low probability of success. And as you can see, it failed. And we are anticipating the market breaking out the lower side of this market and possibly continuing the downtrend. And so let's come back over. So we are still bearish on this market, and we're getting a little bit of a pullback. We're getting a little pullback on this first drop on the Nasdaq. You can see we got four down bars, two flat top bars, and then we're getting a little pullback bar. So this would be an opportunity to take another short position, a good place to enter to the Nasdaq to the short side. Now, of course, it can turn and rally and start to go back up. This is always a possibility that we could have a bullish day today, and there's the possibility of a bullish day simply because if we come back over and go into I want to get us back over into the 1 minute charts so we can watch that morning bell. But we do have some news to be mindful of. If we come in and look at the news, this is today's news. And on the news front, Wednesday, you can see at 12 a.m. we had some news that possibly moved the market. We go back and look and see. But as we come down 8:30 in the morning, we've got gasoline stock changes. That's going to affect some of these commodities. But what we're really interested in is the 12 o'clock news. So 7:30 we don't have anything right at the open, but at 8:30 we've got some mostly crude oil stuff happening. We could go watch crude oil at 8:30, so that's in an hour. I'm back. I'm in Mountain Time, so 7:30 is the opening time for me, 9:30 Eastern. But 12 o'clock we got the Fed interest rate decision, and that's going to be a big market mover. Now it may not move the market today because the forecast is 5.5, the consensus is 5.5, the previous was 5.5. And if they just leave it at 5.5, which they're expecting them not to move the interest rates, then it may not move the market much. Although that could be bullish because if they don't raise interest rates, then that's good for the market and the market could rally. So that's what we're anticipating. If they do raise interest rates, ooh, market's going to tank like a rock. Okay. So we got FOMC economic projections and Fed interest rate decisions at 12 o'clock today, 12 o'clock noon. And so all of these interest rate projections coming in here at 12 o'clock. And then the Fed press conference at 12:30, which also has a tendency to move the market as well as he starts talking about whether he's positive or negative on the overall market. And then just to look quickly to tomorrow, Thursday, not a whole lot in there that's going to get us real excited. 8 o'clock, we got some existing home sales, which might move the market a little bit, and existing home sales for August month over month at 8 o'clock tomorrow. So a couple things to keep in mind and be aware of. And I'm going to bring that back off the screen. We'll put that back up here. And okay, so that's what we need to be aware of as far as the marks go. Today should be a good day. Market should move a little bit in anticipation of the Fed speaking. That always happens. The market's going a little bit crazy. Again, we're getting divergence between the indexes. So the big markets, S&P, Dow, and Nasdaq, all had that big flush down, and now they're starting to rebound. Whereas the Russell took off to the upside on a breakout of that downtrend. So we have the opportunity to get into the Russell right here. You can see this little pullback. You remember seeing oh, let's see. We're not seeing the market over here. Oh my goodness, were you not? Was I missing the whole thing on that? I bet you missed that whole thing that I just talked about on the news. Oh, I'm not very good at this. program. Let's see. Let me show you one more time. I'm going to bring that over so you guys can see. And we'll do this again. This is the news that we're looking for. This is I apologize, it didn't project that. I don't think that projected. But this is the news that we're looking at. So this is our economic calendar, and this is what we're looking for today. This is the 12 o'clock Fed chair you can see in here. 5.5 on the previous, 5.5 on the consensus, 5.5 on the forecast, and the actual. So the FOMC Fed interest rates coming in here at 12 o'clock, and then the 12:30 is the press conference. So I apologize. I sat there and talked about it, but didn't show it on the screen. So we'll bring that back off here. And back to the charts. All right. So these are the charts that we're looking at. And this is the market starting to rally back up out of here. And look at the Russell. I thought the Russell might give us a continuation of the trend out of there, and it's failing. Look at that huge clearing bar. Now, a clearing bar is a bar that goes up and clears out all the highs, goes down, clears out all the lows, and comes back and closes right with a little tiny body in the middle. Now, these are Heikin-Ashi bars. Remember, Heikin-Ashi bars are a little bit different than our normal traditional price bars. And so these are a little bit different candlesticks. They're mathematically smooth. I can take those off and you can see the difference. So we'll take off the mathematically smooth candlesticks. So that's what normal candlesticks look like, and that's what the normal market would look like to people. That's what most people are watching and seeing. When we turn on the Heikin-Ashis, Heikin-Ashi kind of smooths things out a little bit, gives us a little bit better idea of what the trend is, and we have a little bit different view and a little bit different strategy of the way we trade them. So to me, I like them. They're nice. Let's come in here. We got a couple guys saying hello. Matt Baker, good morning, Matt. Glad to see you online with us again this morning. And John Mackey, good to see you guys. We'll pop those up there quick. Matt Baker saying hello and John Mackey saying hello. So it's good to see you guys. Glad you're here. Markets are being a little crazy today, so we'll just give them a few minutes to work their way out and decide what they want to do. Let's come in here and draw a couple of trend lines on here. So we got a peak right up in here, and we got a valley down in here. So that's kind of our channel for the day. So if it breaks out and goes above that channel, we're going to call the market bullish. If it breaks out and falls below that channel, we're going to call the market bearish. And that's basically the same on all these markets. I do have the bulls and bears turned on the 1 minute chart over here on the Dow. That's what's turning the price bars red, yellow, and green, as opposed to the Heikin-Ashi color code changeover. So here's our highs and lows for the S&P. Here's our bracket. And this is just the 5 minute. Well, it looks like the 10-minute bracket. So this is the 10-minute bracket on the Russell. But over here, we're going all the way back to 7:10 a.m. to get that high. And then this is the low down here that we're seeing on the NASDAQ. So the NASDAQ starting to break higher. It's breaking above that. It's breaking above the average true range. And it looks like it wants to close. Okay, so the NASDAQ just indicated that it wants to go bullish. We got a little pullback on the top. We'll see if that holds. We got 50 seconds left on that bar. We're getting a little flat top right here on the S&P. Usually we have to be very careful this soon into the day, into the morning bell, because the market still could be a little bit crazy. When be careful and cautious taking positions. Look at the Dow. The Dow's starting to flush. The Russell is rallying. The NASDAQ is rallying. The S&P is trying to break above that little flat top we just drawn in there. Not real thrilled about taking a position right now because we don't have enough convergence. We've got divergence between the Dow, the NASDAQ, and the S&P, and I like to see convergence. I don't want to see that Dow dropping while the other two, S&P and the NASDAQ, are rallying. That's not good. That's too much negative pull to the downside on the Dow, pulling the Dow down. The S&P and the NASDAQ are rallying. We'll have to wait and see if that Dow will turn and start to rally. That might be the one that we trade as it turns and pulls and starts to go back up again. Let's go and turn off the bulls and bears in here and see what now we don't want that Dow to close. See the S&P's dying right here. That Dow is pulling this market down. That S&P isn't rallying along with the NASDAQ, but we may get the the S&P and the NASDAQ may pull the Dow up. So let's kill this in here. This is a yesterday line, and so is this one. We'll take that one out just for confusion's sake. And we've got a 50-period moving average in there, and this is a 50-period exponential moving average on the red line. So we may get a rally in here. We could take this. We could come in here and just with a small position, go in there. Oh, yeah, we got it. Okay, so we're long one on the Dow, looking for it to turn and rally and follow along with the NASDAQ and the S&P going up. So we're looking to take that position long. So we got all of them rallying right now. And they're all taking off good except for the Dow. The Dow's lagging behind. So generally I like to take the lagger in anticipation of going along with the other markets and to follow them up. We'll see if that happens this time. We might get this thing, this coming down, it bouncing off of that 50-period moving average. Or that's the 200, isn't it? 200. So that's the 200. And it still wants to fall. It doesn't want to go up. So we're pulling a little bit of a down trend right now. The other markets are still rallying, so they should pull that Dow up. Dow should go up with these, but it's not doing it. Come on. Sitting through a nasty drawdown already. First thing in the morning. So let's take that off for now. And it may pull the others back down. The Dow may pull these back down. We're going bearish. So if that's the case, we may have to go take a short position. I don't want to do that. I don't want to take it. It might just stab that yellow line and stay. We got 11 seconds left on this bar to stay bullish. Let's stay bullish. See if we can't. See, this thing's starting to come back down. So this could be an ABC to the downside. We go A, B, C to the downside and watch these things tumble down. Now look, the Dow's starting to rally and the others are starting to fall. That's not right. That's not what I wanted to do. Oh, now I made a mistake. We'll see how we play that one out over there. Okay, if the Dow wants to go up while the others go down, we'll go up with it. Oh, we're getting in a drawdown again. I don't want to see it. We're getting kind of crazy here. We're going to take a long position on the Dow, and if the market starts to break higher, this NASDAQ is also giving us an indication that could be a buy signal too. Comes down, stabs the yellow, didn't break it. Now, if it breaks higher and starts to go long, we'll go long on the NASDAQ. But now it seems to. Okay, we're long the NASDAQ. We're long 2 in the Dow, and we're long 1 in the NASDAQ. Oh, I'm having a nice rainstorm here, a little storm coming through today. Okay, the S&P is starting to rally. The Russell's starting to break higher on that pattern. Let's just see some follow through now. We got to see a little follow through. Don't die on us, guys. We need the follow through. Come on. Come on. Don't die on us right here. Oh, that NASDAQ just suddenly died on us. Come on. Come on, guys. Push higher. Be patient, land. Be patient. The Russell's taken off like a rocket ship. That's the one we should have traded. We say that every morning. We're like, we should be trading the Russell. Okay, we're making a little bit of progress here. Nothing over here on the NASDAQ. That stupid thing is being really stupid. Come on, be patient, land. Be patient. Be patient. Sometimes patience costs you money, though. We've got our money back from our loss. We've recovered the loss if I was just to get out of everything right now. But let's see if we can't see this thing go a little bit more. Come on. Okay, we're not having luck over here on the Dow. I'm going to kill the Dow, and we're going to let the NASDAQ run. And I'm going to put my stop at break even. We're just going to bring that up there at break even on the NASDAQ. And if it comes back against us, we'll just get out with a scratch trade. It looks like it's being sad. It's getting sad. Okay, come on, push up there, push up there. Keep it going. Yeah, watch it. It's okay. We got lower highs over here on the Dow. That would actually be a buy signal if we felt like we had any momentum on this market. We could take another long position off of that. See that lower high right there. But we're already in the Nasdaq right now, and we're trying to see it. It's creating a lower high. We've got 36 seconds left on this bar. It's going to either break higher or it's going to stop us out. It's got to have patience, land. Have patience. Have patience. Patience, patience, patience. It's not going as fast as I would like it to. It was going a lot faster before. It's slowed way down. Okay, now look at the Dow. The Dow broke that little flag. So it flagged right there. And now it's starting to break higher. So that should pull the NASDAQ up. Come on, NASDAQ. Come on, buddy. Now it just closed out the, oh, it died. I wanted the NASDAQ to go. It's a bigger market. We had a bigger opportunity to make more money if it would have run higher. The Dow, the smaller market, well, of course, we were into that one with two. It did pop higher. But the Dow, the NASDAQ died on us. Where did everybody go? Where did all the momentum go? Come on, guys. A little frustrating to see that market do that to us. So the Russell's still running off of the ABC pattern. Look at that. There's our little pullback, and it's still going. The Dow came down. It started to go. It hesitated. I took the profit off of that one. And at least we're back to green. We got all of our money back, but market petered out on us. Okay, what are we going to do now? So that was an ABC. We were saying there's the possibility that could go down. Let's take that ABC back up and put it. We'll readjust that over here on the S&P to this line here. Now, in your track and trade, your ABC tool probably doesn't look like me. Look at the Dow. That's the one we should have stayed in. No, we picked the NASDAQ. How can that happen? Seems like it happens to me every day. I picked the wrong one. The market that I don't pick takes off and goes to the moon. I was in this one. Why didn't you follow through, you silly NASDAQ? And then the Dow, the one that we had two contracts in, we got out because we're like, well, we'll stick with the bigger market. Let's stick with the NASDAQ. We're in. We got a good position. It'll run too. No. And then we just sit and watch the Dow go without us. The Russell's going without us too. Okay, we're getting another signal for an entry. Should we take it on which one? So, not real thrilled about this entry. I'm going to take it over here on the S&P. The NASDAQ, if it breaks, see, it just broke that high right there and then flushed. So, it didn't fill. And that would have filled our order and then taken us in the wrong direction. Same thing the S&P is trying to do right now. It's flushing. So let's kill that order. We're not going to go long on the S&P at this point. And the Dow still going up there, touching our previous high. Look at that. Went right up there, touched the previous high. Hopefully you guys are trading along with me. You got your charts open, putting some orders in there. I was going to show you my settings for the 123 tool. The 123 tool is when it comes out of the box, when you get the software, it doesn't have these settings that I have. So I'm going to show you my settings for this. So this is my settings for the 123 projection tool. It's got the Fibonacci ABC projections and all those numbers in there, but it doesn't come out of the box like that. So there's my settings. You can see how I've got mine set. I've got everything turned on: text, show arcs, snap, always show lines, show 3-4 break line. I set the text to ABCD, so it's an ABCD tool instead of a 123 tool. And then I come in and I turn on all of these projections. So one, and I just have a user definable, and I set it at 50. So I can see from A to B where the 50% marker is, and I change that to percent. And then I have 2 to 3, the 2 to 3 leg, or the B to C leg. I make that be a 1, 2, 3 ABC retracement. And then on the 3 to 4 CD, I have that be the user definable: 38.2, 61.8, 50, and 100. You can just use Fibonacci on that. It works just the same. It works just great too. It just puts a couple extra numbers in there. But if I use user definable, oh, now I just screwed it up. So we'll just leave it on 1, 2, 3 for now. And then on, oh, that's this one here. 1, 2, 3 retracement. Okay. And then down here, this is user definable. That just takes a couple of extra numbers out. And then I say all of these are going to be percent, and then the projection is Fibonacci. So if you want to set your ABC or 1, 2, 3 tool up like mine, that's how I have it. And my defaults, yep, just like that. And then you can use your Fibonacci tool to kind of project these ABC patterns. And the ABC patterns are our #1 favorite patterns. Oh, look at that. We were in the NASDAQ long and it died. We were in the Dow long and it took off. So we've got divergence between these markets. The S&P and the NASDAQ are playing the same game. It looks like the Russell and the Dow are playing the same game. So the S&P, we picked the NASDAQ and it died on us. I had positions in the Dow. I took the position off the Dow because it had made enough money to give us back our profits. Whereas the NASDAQ, being a bigger market, I thought we could keep that one and let it run and make more money. And at least the Dow, we got our money back from our first attempt. So we're sitting here at 25 bucks on the morning. Feeling bad about it because we're having FOMO on the Dow. It's not giving us an opportunity to get back in. That first little flag, it flagged right there on those first bars. And that's where we took our profits, because we got in on this reversal right here on the red bars, and we rode it up to there. And that's just with 2 contracts. We took it off and recovered our money. And then I went to this market down here on NASDAQ and anticipated NASDAQ was going to go like the Dow, and it didn't. It failed on us. So we had to get out. I think with 50 bucks on that one, right? It's about what we made. Hopefully you guys are doing better than I am. Let me come in here and get some information going. Who am I? Lan Turner, former instructor at the Chicago Mercantile and Board of Trades Education Centers, currently instructor of finance at Utah Tech University. So I teach finance at Utah Tech University. And I like doing these YouTube channel things. This has been fun. I decided to start doing this for my class members because we go to class at night. I teach night classes. So it's like, 6 o'clock at night when my class starts at the university. And then the guys are like, well, we want to see you trade. And I'm like, well, 6 o'clock at night is not the best time to be examining trades. So how about we do this in the morning? So I started doing this in the morning for my classroom. I got new classes start in October, the first week of October. So right now I'm just kind of not got any classes running, but it doesn't mean we're going to stop trading on the YouTube. So classes start. If you're in the St. George area and want to come down and join my class, everybody's welcome. You can go to dixiedaytraders.com. That's the name of the class for the school, dixiedaytraders.com. Name of the school used to be Dixie State, and they changed the name to Utah Tech. So when I was teaching there and we were Dixie State, I called it Dixie Day Traders, but we'll just keep the name Dixie Day Traders. That's okay. I like that name. All right, we're getting ready to break higher on the NASDAQ once again, but it's just too weak. Not thrilled about it. Look at the stochastics down here. It's just kind of dead center. It's not really down in the oversold region or in the overbought region. We're just kind of neutral. The Russell looks like it's trying to break higher off of those red bars, but it's just been going sideways too much right now. The only one that looks positive over here is our S&P, looking like it wants to break higher and follow the Dow. The Dow needs a little relief. It needs to come down a little bit. We could anticipate a break and a higher break here on the S&P. We're looking forward to. The problem is if you buy a break of a previous high, which is what that's doing right now, it's trying to break this previous high. Those often fail. So it'll go up, it'll break it. It's got to hold above it. I want to see it hold above it. Now we just went bullish. Now it's trying to take off on a break above this previous high. Let's see if it can hold that up there. If it does, grabbing the wrong tool. If it holds above that high right there, which it did, it closed higher, so that's good. See its failure? Now it's coming down to stop everybody out who got in. See, that's why I don't take those first breaks. See that failure? Look, it did the same thing over here on the NASDAQ. It broke above those yellow dots, and then it failed. So it's going down, and it's trying to take everybody's stops out. Now, an advanced strategy would be say, I'm going to buy right now. As soon as it pegged that yellow dot, a lot of advanced traders would hit the buy signal and buy that right there on that yellow dot. Now, I'm not going to do that right now because we're going to be a little bit more conservative. But you could hit the buy button right now and pick it up and anticipate a continuation of the uptrend. It's just coming back with this clearing bar in an attempt to take out all the stops of the guys who got in on a break above the previous high. And now the market's coming back. It's flashing back down. So that's why I don't take those initial breaks of those previous highs. They're dangerous. A lot of guys like to take those, and it's just dangerous. Sometimes they do take off and they go. It held above it, and then it looked like it wanted to go, but I wanted to see it go up, give us a little bit of a flag, and then take the flag. So that's a good thing we didn't take that long right there. If guys would have bought right there on that yellow dot, they'd be scratching right now. They'd be sad, though, because it came down against them pretty good. Again, the Dow we need a little bit of a pullback on the Dow. We need some relief on the Dow. I want to see the Dow pull back. The Dow had a bigger move. Look at how choppy the NASDAQ. All those upper topping tails and bottoming tails, that's not good. You want to see flat bottoms and flat tops. Flat bottoms and flat tops. Sounds like a country song. Flat bottoms and flat tops. Okay, here we go. The Dow wants to run again off breaking off that little pullback. The Dow's got some strength in it. Not so sure I want to go long right there. I want to see a little bit more of a relief. We're getting that on this S&P. The S&P's it's just too choppy right now. Look at the chop, 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 chop. That Dow gave us a nice run right there, you have to admit, and we were in it, and we feel bad about that. That's some FOMO on that one. There goes a little bit of relief. We're dropping on the Dow. Okay, we're flagging on the NASDAQ. See that? Got a higher low. So it went down, made the point on the NASDAQ, and then it pulled back, made a higher low, and now that was a flag to the downside. Not real thrilled about going short right here on the NASDAQ either, just because the market's so neutral. Our DMI is up. It's showing good movement. We're up high. We're getting some volatility in here, but the DMI is rolling over the top. So losing it a little bit here. Let's bring this C point up. Up to there. So we got a full 92% retracement off of that peak there. And now the market's starting to fall. So we got a couple of drives in here. We got nice drive 1, drive 2, drive 3. So we got 3 drives up. They were just ugly, not real tradable, but there's 3 drives up. Now we should get a little ABC retracement off the top of here. We'll see if that occurs. A little ABC, see it pull back and then pull out here and then drop once again. We'll watch and see. It had 4 bars. We had the clearing bar and then 2 flat, but look, that was not a flat top. Oh my goodness, look at the Dow rocketing off again. Well, that could draw the NASDAQ up. So the NASDAQ's bouncing off of the VWAP. Boy, look at that Dow go. Do we want to try and follow along with it in the lagger? Here we go. We'll give it a shot off of the NASDAQ. Maybe the NASDAQ will pull up with it. Everything else is rallying. Let's see if the NASDAQ will go too. Boy, look at that look at that Dow go. Come on, NASDAQ, follow along. Do another big, you can do that for us. Come on. Go, go, buddy, go. Go. We want the extension like those guys. Come on. You can do it. We've seen you do it before. It's the real lagger and it just doesn't want to go. My goodness sakes. Oh my goodness. How come everything else wants to run and not you? Go, buddy, go. Go, buddy, go. Oh my goodness. Have patience, land. Have patience. Have patience, land. Oh, it's showing so much weakness. I just want to kill it right here. Oh my goodness. Have patience, land. One more time. Give it a little bit more. One second. Come on, it's going to pull up. Oh, it's going to die on us. Oh my goodness. Now we're down 125 bucks. Can you believe that? Can you believe that? That NASDAQ is just a sad state of affairs today. The Dow rallied like a rocket ship. So did the S&P. Even the Nat Russell got a few points out of that thing. And the NASDAQ, I don't want to. I don't want to go. I don't want to do it. I'm too lazy. What a lazy NASDAQ. Wonder what caused that little spurt of anxiety. What do you think, guys? What's going on? What's your trading like over there? How are you guys doing? Any comments? Any comments? Let's put this up. We're trading futures to the Chicago Mercantile Exchange. I didn't want to reverse that order because we had too much strength on the other markets. I didn't want to. I thought this thing might come back. We could try it again, but it's trying to go. Well, it's not trying to do anything. It's just dead. The NASDAQ is dead. Come on, come on. Give us something. Something we can latch on to. What? I'm not rich and it's already been 30 minutes today? I'm not rich beyond my wildest dreams after trading for 30 minutes? Okay. Let's have some realistic expectations. Let's not have unrealistic expectations. I wrote an article called Unrealistic Expectations. Don't have unrealistic expectations. We just need the market to move. We may have to come back top of the hour. Well, it's top of the hour now. It's 8 o'clock. Let's see if we can't get some movement now at this top of the hour. Maybe we should have reversed on that NASDAQ, huh? I didn't want to reverse because the others were rallying so hard. I was like, I don't want to take a reversal on this. Now the market's starting to come down. Gave us a little Well, I guess if you read the chart, we were in a downtrend, right? And this little pullback here that we were anticipating was going to go with the rest of these was just our little flag. So that's our flag. You can see it in hindsight. That's our flag. And then down it goes off that flag. But because the market was all excited to take off like a rocket ship on the Dow and the S&P, I went long on that flag because I thought it was going to follow the Dow, that big shoot up. I thought we were going to see that continuation, but man alive, that thing went up 2 big bars and then died. And so this thing died and gave us a little flag to the downside. I didn't want to reverse because the market's not, it's just not strong enough to sit there and reverse, do our reversal game. So I just want to get out and minimize our losses. I guess I could have reversed, but didn't feel comfortable with that when the other markets were taking off long so hard. We're on the back side of this trade now. So now we got a confirmation that the market has turned bearish. So now we don't want to take any more long positions off the Dow. We'll look and see if there's not some opportunities now to take short positions and look for a retracement, see if it won't come down. Maybe it'll come all the way back down to the VWAP. We got 2 blue markers in there. We probably ought to change the color of one of them. This closer one is the 200 period moving average. And then the VWAP is a little bit darker one down here further. So the Nasdaq's back down, bouncing around the VWAP. The Russell is trying to break below the average true range and show some bearish. But look, it broke. Look at the Dow. It broke the average true range and it's pulling back. That's common. It'll come down and break that thing, and then turn and go back up. And the reason is because a lot of guys use this ATR, use the average true range of 1 to determine bullish bearish trends. And so a lot of guys try to take short positions on those arrows. And you hear, we talk about that in class all the time. We're like, why didn't you just buy the arrow, Land? Look, buy when you get a buy arrow and sell when you get a sell arrow. Because oftentimes what happens is when you get that arrow, the market pulls back against it. And so I want to get the arrow, wait for the market to pull back against it, and then get the next rally up. And that's exactly what happened right here on the Dow. You can see we got the arrow bullish right at the peak, and then it pulled back, and then the entry was actually this flag right here. That's where we wanted to get in, and then it went up, and then this is the next flag, and then it went up, 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 up. So then we got another little flag in here with a clearing bar. That clearing bar screwed everything up. That kind of was like, which way are you going to go? And usually the next bar after the clearing bar will be the determining direction of the trend. So it went green, and so the trend went up. So now we've got a bar coming down. We got this 1, 2, 3, 4, 5 bars coming down, and now we got the arrow, and it's turning right around and going right back against us once again. Just lots of indecision. Look at this thing. So now you're like, well, Land, let's go long on the NASDAQ again. Okay. Is that really something we want to do? Try and go long on the NASDAQ right now? I don't think so. So we want to be in line with the arrow. And that was one of the mistakes we made right here. The arrow was down and we tried to go long and we didn't have an up arrow. So the market failed and continued down, and they gave us a little A, B, C, D pattern down. So now if it's going to turn around, we want to see it hold above the yellow, give us the yellow arrow, go up, pull back, and then give us the ABC to the upside. That's the way we want to go long. We don't want to take these are called A1s. Every time you see the very first break to a new trend, it's called an A1. And A1s, I always say, don't chase the A1s. Okay, there's an A1 right there. Now, if we get a pullback on a single bar, a lower high, that would show weakness right here on that A1. That's a new A1 right there. And I like to take A2s. I want it to prove to me that it really is a bullish trend and not just a pullback on a bearish trend. Prove to me you want to go up. Prove it. Show me that you got some bullish strength in you. Look at the Russell's fallen. The S&P's bouncing through this same pattern. Come on. Prove to me. I want another higher high and a flat bottom. So we got 2 flat bottom bars. I like to get 4 flat bottom bars with 2 little red pullback bars. That's my favorite. So there's another flat bottom bar breaking higher. It's not really breaking higher. It's kind of stalling out right there. Right there at 15,400. It's stalling out. Okay, the Dow's giving us a flag. That's a bullish flag on the Dow. We could take a long position on the Dow right now, but it feels like it's not. I don't feel good about that long position. Stochastics is down low, so it's not. Well, see, that's why I didn't want to go long on that NASDAQ. The volume is low, 700 volume per bar. I like to see that up around 2,000. What do you guys think? Cornell, good morning. First time seeing live from this channel. I have the software and enjoy the content. Cornell, great to have you. Thanks for coming. We've had a little bit of luck this morning, but also a little bit of not so much luck. We're down a little bit right now. We're trying to recover. We get down 125 bucks. So glad to have you, Cornell. Thanks for coming. If you guys want to go down and hit the little like, the little thumbs up thing, that'll help me out a lot. I appreciate it when you do that. That helps get the word out that we're here. And if you make a comment down in the comment section, that even helps out even more. So why don't you guys tell me just a little bit about yourself? Just say, I trade stocks, I trade futures, I trade Forex, I trade currency, I have long position in Apple. Just give me some comment and or ask a question. Hey, what's that green thing on there? What's that yellow thing on there? What do you think of the ABC tool? How do you set that up? If you ask any question, I'll try and answer it down there. And I'll also, that's good for the algorithm to talk in the comment section. It's great for us here. We love to chat with you in the chat window, but Google ignores that. They don't really care. YouTube doesn't care if you chat in the chat window. But if you leave a comment in the bottom, they really think that's cool. Look at this choppy top. It's a double top, so this is bearish. So we were thinking we were going to go long. There was our opportunity to reverse and go short on that NASDAQ, but that was a new. Look at the NASDAQ tank here. Everything's fallen. Where was our opportunity for entry? Where was our opportunity for entry? Right there on the Russell. There it was. So you had the Russell drop, had the little 2 bars, and then it gave the little green bar pullback, and now the market's trending down on the Russell. We should trade the Russell more often. There's your pullback on the green bars, and then down it's coming. Pullback on the green bars, but we were looking for it to give us an up and then an up again, and it failed and started to go down again. So this is a little ABC 1, 2, 3 top formation. So we go 1, 2, 3, and we're down here at 130.9 right now. So if we draw our Fibonacci ruler across there from bottom to top, we're going to probably see that market right down there, right dead center of that Fibonacci sweet spot, which is right dead center between 38.2 and 61.8. Oh, look at the wow. Look at the S&P drop. So we're right here in the neutral zone now. The S&P, yeah, the S&P Cornell's been going through some good trends, a little bit better than the rest of them. It's been a little bit more, but nothing's really moved far enough to give us any. This is the first one that's really given us more than a couple of bars. This is a 4-bar run, and 4 bars for me is usually just a starter. I want to see 4 bars before we even get excited to get into a trend, and this is the first time it's really given us. There's a little bit right in there. I guess that was 4 bars, but then it rebound 2, 3 bars. Yeah, I'm just not being aggressive right now, just trying to be careful. Maybe I'm being too careful. You guys picked up any trades? You guys had any luck? It's like fishing, right? You go fishing with your buddies and sometimes they catch all the fish and you're sitting here looking at the fishing hole going, why aren't any fish coming my way? Well, quit sitting on the sideline and start fishing. Okay, look at the CMFs way down here deep in the bottom, and this is giving us a flag to the short side down here on the Russell. That's a short flag. We could take that short position if we can get in there fast enough. We'll try that short position on the Russell. The Russell's a small market. It's got to move quite a bit to make any money on it. Of course, that's good so that if you're wrong, you don't lose very much either. Let's watch the Russell. Okay, now the other markets are dropping. The NASDAQ is dropping. Tried to trade the NASDAQ mostly today. Took a couple positions on the Dow. Come on, Russell. Now you can follow along with everybody else. Go through with your follow through. Keep following through. I only went in with one. We'll see if it breaks. We can add another one, but it's pulling back against us already. Nasty little market. It's in the neutral zone, so I'm not real excited about reversing a whole bunch of times because it's in the neutral zone where you get whipsawed back and forth a lot. Okay, the Dow is going into a flag and the NASDAQ is dropping. So we're going to add one into the, if I can get it in here fast enough, we're going to, pick the right chart land. So we're going to see if we can take a short position on the, it's going the wrong way for us. Russell's going, doing nothing. Russell is, as soon as we decide to go fishing in the Russell fishing hole, it decides to die. I don't want to reverse. Let's, okay. So we're getting another pullback. We're getting a rally on the, look, on the Dow and on the Russell starting to go back up again. Let's see if the NASDAQ wants to follow along. We'll try it one more time. It's going against the trend. Let's kill this one. We're long the look, the Dow's starting to rally, the Russell's starting to rally, the S&P's starting to rally. So we're going to go long the NASDAQ anticipating that it's going to start to rally, and it's not rallying. Oh my goodness. Oh my goodness. Oh my goodness. Come on. Come on, buddy. Come on, buddy. Look at the Russell. You can follow along. Come on, buddy. There we go. Into the money. Now stay up there. It's not a good place to be going long. We're in a downtrend. Looks like a flag to the short side. So we're trying to take a flag to the short side. We're going to reverse this one. So we got 15 seconds for this bar. We don't want it to come down on us right now. We want this bar to stay up there for 15 more seconds. 9, 8, 7. Stay up there, buddy. Stay up there. Don't reverse yet. Don't come down, you little bugger. Now you can come down if you want to. But if you come down, you better move fast and hard to the downside. Look at that stupid thing. Oh my, 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 my. Have patience, land. Be patient. Be patient. All we got to do is get to break even and wipe the sweat off your brow. Have patience. Oh my goodness, what a dead market. Boy, we're struggling today. Down another $185. We did that yesterday too. We got down a little bit. We got it back to break even yesterday. I had a good day in the afternoon. I came back at, I think it was 9 o'clock yesterday. Had a couple good trades. Ended up getting all the loss back and up about a couple $100, and then I called it done. But at least we had another green day yesterday. But wasn't able. I guess we left green yesterday about $20, didn't we? We got everything back that we lost. There, now that's a failure to the upside. And so we reversed to the downside. And of course, you know me, I want to get my stop in there as soon as possible. 200, and we're down 265. I want to see if I can't capture that. It was there at one point. I had all my money back. I just want to get a recovery in here. Come on, come down and recover me. It doesn't even want to do that. Did once, came down and hit bounced off the bottom. I didn't have my limit in there fast enough for the recovery, for the reversal. This market's just so dead, it won't even drop far enough to recover our losses. Are we going to reverse again? Oh my hell. There we go. Okay. We're back to $60. We got our money back. We're green. Now watch it fall to the floor. That happens too. That's all right. We got our money back. We can wipe the sweat off our brow. Wait for another setup. Okay, the Dow wants to go long again. What are we going to do? What are we going to do? John Mackey saying, where's the comment section you're speaking of? Down in the YouTube, they have comments underneath the video. So if you go full screen on the YouTube, you can't see the comments. It's only when you've got the little screen and all the other videos are here. It's down underneath. There's a place you can put comments down there. It's kind of hard to see. It's kind of weird the way they do it. I don't know why they make it so hard to put comments. And then they put so much effort into it. They say, wow, comments are really important. If you get comments, that's great. We really think that's wonderful if people put comments, but then they hide the comment bar. It's really funny. I don't know. Yeah, it makes it hard to put comments in. Cornell likes it. Are you happy about this? You want me to keep doing this? Because I don't know how long I can keep doing it. I've been doing it for 2 weeks now, and my live class starts in another week. So I want to do it for my classes. So I'll keep going for a little while longer, Cornell. We'll hang out here together. Look, the S&P is getting ready to break higher. Matt's saying he doesn't think the comments are there when you're live. I don't know how it works. Maybe just the comments in the side. These I know don't show up. Once I close out and say end the live stream, all these comments that we've got here that you guys talking back and forth, they go away. They throw them away. And then the only thing that's left are the comments down below the video. And then I can go in through the system in the back end and answer all your comments. So I don't know why YouTube does it that way. It's just kind of a weird thing. But they put such a high emphasis on comments. So at least give me a thumbs up. That helps too. If I can we'll get some more people in here and come and do this more often. We got Pit News Magazine. I wanted to tell you a little bit about Pit News Magazine today too. We're working on the October issue. And if you don't have Pit News Magazine, swing by and pick that up. You can get the entire year's 12 issues for $1. And so that's where I kind of communicate all of my strategies. I wrote a book, and I mentioned that to you. So you're familiar with my book. And this is my book, and it's out on Amazon. And but I wrote this book, and then I still have more ideas that should be in another book, right? And so I have Pit News Magazine, and so I write all my articles or all my chapters into Pit News Magazine. And so all the stuff that we kind of learn and that are not in the book, I continue in Pit News Magazine. So if you guys can go out and subscribe to that, you can buy the book, but then all the updates are all done through Pit News Magazine. And we're finishing up the Pit News Magazine for October, and David Duty, one of our guys from Trade Mentors, is putting an article in there where he's got a really great system that he loves, and he uses the range bar 50, and he's talking all about that. So if you guys want to learn David Duty's strategy, and he's been quite successful with it, kind of fun. Maybe we'll play with it here a little bit after the article comes out, and we can go read that and see what he says. And that's going to be in the October issue of Pit News Magazine. So if you guys haven't got that yet, swing by and pick up a copy of Pit News Magazine at pitnews.com. Use my code right here on the window. It says subscribe. Use, what is it? Live LAN, I think. Coupon code LiveLAN $1. So Live LAN $1. You get the entire 12 months subscription for $1. And the nice thing about it is it's got audio for almost every article, and even David Duty's doing a video to video demonstrate his trading strategy. So pick up Pit News Magazine. I got some free stuff out there. If you guys want some free stuff off my link tree, you can go to my link tree, and I got a couple of free PDFs for you to download as well. So you can grab those. So different patterns and some different stuff in there. Well, the markets aren't doing much. They're kind of dead right now. And that oftentimes happens when we got the Fed chair speaking. Remember, we got the Fed coming in. I think I got that in here. Still up. Let's pull that up. So the Fed's coming in. And again, for you guys who missed that earlier session that just joined us, the Fed is speaking today at 12 o'clock noon and giving an interest rate decision. The previous was 5.5. That's what interest rates are at. The consensus is that they're not going to change it. 5.5, and the forecast is 5.5. So we're waiting for the actual to come in. They're going to come and announce that at 12 o'clock, that whether they're going to raise interest rates or lower interest rates or whatever they're going to do. We anticipate they're not going to do anything. They're just going to leave them at 5.5. And so usually what happens on FOMC days is the morning has a little bit of movement, gets excited one way or the other, and then the rest of the day kind of is quiet until the FOMC speaks. So where I generally like to come in and do top of the hour, I like to come in, like it's 8:30 right now. So I'll kind of sit aside and not trade for the next half an hour. And then at 9 o'clock, I'll come back and start watching the market again, and I'll trade for the first half an hour of the 9 o'clock session. And then I'll sit aside and come back at 10 o'clock and watch the 10 o'clock session, just the first half hour of the 10 o'clock session. And I usually get some really good trades starting at the top of each hour. So the first 10, 15, 20 minutes of the first of each hour is generally a good trading time. It kind of dies and slows off at the half hours. I don't know why that is. It's just a phenomenon that happens in these markets. People get tired of the half hours and they get excited at the top of the hours. I don't know why, but if you come back at 9 o'clock and start watching the market, we'll generally get a nice trend. And then again, the same thing at 10 o'clock, sometime in the just after 10 o'clock or right around 10 o'clock time frame, we'll get another nice trend that we can trade. But that often doesn't happen on FOMC days. Those 10 o'clock, 9 o'clock, 10 o'clock time frames oftentimes don't play through very good because everybody's waiting to see what happens with the FOMC. So FOMC is going to come in at 12 o'clock, and then at 12 o'clock, we'll get all kinds of crazy action, and then the market will smooth out, decide whether it wants to be bullish and bearish, and then we can trade that trend. And that usually ends up being a really good trend that you can make a lot of money on. So remember, the name of the game is survival. We want to survive until we can get a little bit of a cushion in our account. Once we get a little cushion in our account, then our strategy can change a little bit. Okay, so in the beginning, we're playing very careful. We're trading small markets in the beginning, and then we can move up to bigger markets like the NASDAQ. That's the idea. Sometimes I jump right into the NASDAQ, but the idea is to start with some of these smaller markets like the Dow or the Russell, build yourself up a little bit of a cushion, and then you can take a little bit bigger trade. We're going to initially, if we go green, we're going to just recover. Go red, we're just going to recover, try to get back to green. And then we want to build that cushion up. Once we get that cushion built up, get in there $400 or $500. Then when we start to trade, we can start going in with larger size. We can also start doing pyramiding and pillaring, and we can start doing castling. And once the market, we got to catch a trend though. To do those advanced strategies, we haven't even had a chance to do a pillar or a pyramid because if we go back out to the daily chart, I'm going to come in here and drop down to the daily chart. You can see the market's it's neutral. This is the bulls and bears up here on the S&P, and it's been yellow neutral for the last month. No big moves, no nice big trends, no nothing. The market's just been really stagnated and difficult to trade. We've been able to stay green this whole time, haven't had a losing day. This is the third week that we've been doing these live shows, and we haven't had a red day yet. So we've been green every single day. I've had a couple of days where I left the live session with like a $20 down or $100 down, but I was later at the top of the hour was able to recover those. So we've been green every single day since we started doing the live trading. And that's been a pretty good. And again, it's because I do that recovery. I don't try and go to the moon. If I get down, my first attempt is just to get that money back, get me green again, so I can start building my base up so that then when I catch that big trend, catch that big fish, then we can really make some money. And so what trading is a lot about survival. It's about just staying alive and not losing all your money until you can catch that big trend and catch that big move. What most people don't understand is that trading is not a consistent game. You're not going to just come in here and make $500 every day. Although that can be your goal, you can say, okay, if I make $500, I'm not going to trade anymore. But usually once we make our $500 and we've got a more advanced, we've been trading for a while. In the beginning, I want you just to prove green. I just want you to get green, stay green, and be happy with your green day and not worry about how big it is. But when you get a little bit further down the road and you're confident that you can do that, you're like, oh well, I can just stay green. That's not a problem. I can just recover, stay green, recover, stay green, recover, stay green. Then you want to start building the strategy up and doing more advanced stuff to get a larger position size. So once you can get that larger position size, you can do some pillaring and pyramiding and some castling. And so that's what we want. But we need a market that's gonna do that for us, right? We can't be doing that can't expect that out of a flat, narrow, sideways market like we're getting here in the market right now. We're kind of in this neutral zone, and so we need to have a market that's really making some aggressive moves. But what you'll discover is that you're going to survive, 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 and then you're going to make a big chunk of money. And then you're going to survive, 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 make a big chunk of money. You'll have 2 or 3 days or 4 days out of a month where you make all your profits. And then the rest of the days are just survive, survive, survive. And then big move, big day, make lots of money. And then survive, survive, survive. And that's the name of the game, and that's how it works. You don't generally just come out with $10,000 every day. I'm just rich, rich, rich beyond my wildest dreams every single day. No, it's survive, 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 big day. Survive, 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 big day. Okay. What you want to do is you want to avoid the survive, 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 huge loss day. Don't have those. Just try and minimize those. They come along every now and again. You get a little excited and you get some FOMO and you start doing stupid shit. You got to be really careful with that. Don't want to do that. Just survive, survive, survive. Big day, not big lose day. Recognize when you should stop trading and not have those big loss days. All right, guys, let's see. I have a little lesson for you. I always like to run a little lesson out. I think I actually gave you the lesson yesterday, and it was the same one I'd done the previous day. All right, trader state of mind. Avoid distractions. Stay focused. That's one of the things that I'm doing here. When I'm doing this class, I get so distracted by talking and teaching and telling you guys all this really cool stuff. And, oh, this is what the software, and these are my settings, and these are the patterns and everything. I get distracted and I miss a lot of trades. So try not to get distracted when you're trading. Stay focused. That's the hardest part of trading is staying focused, identifying the patterns and the trends and the setups, watching the indicators, making sure that everything's lined up so that when you take that trade, you're a little bit more confident in the position. So turn off your cell phones, avoid text phone calls and interruptions. I once missed an $1,800 trade. I mean, I was sitting there, I was ready, it was focused, I was on bar, and I looked down because my buddy sent me a text, and I answered him, came back to my position to look and see what had happened. I'd missed the trade. The market had taken off, and so I sat and watched it go. $1,800 I could have made if I'd have taken that position, but because I texted while I was texting my friend while I was trading, I've missed some big trades. We've missed some big trades in here because I've been talking too much. I talk a little bit too much and not focus so much on the trading side of it. But I'm here to teach, so you know the money will come. I'm not too worried about that. I'm just mostly here to teach you guys and show you what I'm thinking and what my thought process is and where to draw the trend lines and what the tools are and how to set them up so you guys can all do this yourself. So stay focused. And that's the hard part about trading too, is, it's hard to stay this focused for hours on end. So we want to kind of focus in on the best times of day, and that's the opening bell. We want to kind of watch the opening bell, see what's going to happen. But then the top of the hours, watch those top of the hours. Take a break from 8:30 to 9. Go take a break. Go get some breakfast because it's hard to stay focused that long. Come back at 10 o'clock and stay focused for another half an hour. Go away, come back stay focused for another half an hour. Take those breaks on the half-hour time frame, and that might be a lot of the reason why those markets move at the top of the hours, because guys can only focus hard like that for half an hour and then they want to take a break. So do the same thing. Take your breaks at the half hours and then start looking to trade again, and you'll be able to stay focused a little bit stronger, a little bit better, and have better mental acuity. And the biggest thing too is that we start getting build up energy and FOMO. And if we stay there and work through that, we start doing stupid things and start making stupid decisions and start trading, over trading, and taking every little stupid, X1, A1 and all that kind of stuff. We start doing stupid stuff. So you got to walk away and then come back, walk away, come back, and then walk away for the day, come back tomorrow. All right, guys, I'm going to let you go. What do we end up today with? We survived. We're green on the morning, so we'll see what happens. We got the FOMC this afternoon, and I'll see you here again tomorrow morning. We'll do it again tomorrow. It's tomorrow? Yeah, tomorrow's Thursday. I don't teach on Fridays. I do take Friday off from the live shows. So I do 4 days a week, Monday, Tuesday, Wednesday, and Thursday. And I'll see you tomorrow morning. We'll do it again. Thanks for coming. Oh, we got some comments. Let's make sure I answer everybody's questions if there's questions. Matt, I think send a link to the live above the live classes. Link in the live about the live classes. In the live about the live classes. Are you talking about like down in St. George? It's Dixie Daytraders.com. That's if you want to register and actually go to the class down in St. George. All right. So that would be that one. Cornell says he'd love to join. You want to come and, you know what? I have guys. It's an evening class, and it's for it's an adult session class. So it's all, it's not the kids. It's for adults, and we teach the class at night at 6 o'clock. During the day, you can go to Zion's Park. You can go all over and see all that. There's lots of stuff you can do if you want to come down and stay for a week. It's a 3-day, Monday, Wednesday, and Friday. We go for 2 hours in the evening, and we talk live, and we learn all about trading. And they're fun classes. If you want to come down and go to Zion's Park and stay in a Airbnb or a hotel in St. George, Utah, and then attend the classes, you can do that. We have guys do that. So it's a lot of fun. Let's see. Would love to join. Cornell, would love to have you. So come and join us. You have to register with the university. And so if you go to DixieDayTraders.com, you can register with the university. Is the link to sign up on the TNT site or another site? Yeah, Dixie Day Traders. So that's where you can sign up if you want to actually come to the classes in St. George. All right, guys. I'm going to go get some breakfast, and I'm going to be back here at my desk in 20 minutes and watch a little bit to see if the market's going to do. Not expecting too much because of the Fed speaking, but I'll be back at 12 o'clock for sure. Not here live. I'll see you guys tomorrow morning.